I think we are live. Okay, hi, Umesh is here. Um, I'm just trying to verify if we are live now. Okay, hello all. Thank you for joining us. Can you hear us? Can you hear me? Okay, Umesh. Okay, just give me a moment. So okay. Sure. Okay, so we are live. All right. Great. So we are live. Hello, everyone, and welcome to our LinkedIn live event today. This is Sharul, and I am a CEO and founder of CS Ventures. We are a business consulting and professional services partners, and we help you achieve your business goals. And today we bring to you Umesh Sharma. Umesh is a CEO and founder of the time Fintech. And we are going to have this exciting webinar with Umesh where we will get to understand the value of valuations for the businesses, for the startups, for the growing businesses, as well as for the mature businesses. Let's see, there will be so much financial acumen here that Umesh has to share with us, and definitely entrepreneurs can gain a lot of value from this session with Umesh from the Time Fintech. So I am going to bring Umesh here on the stage now. Okay, so here we go.
Hey, hi,
Hi. Hi, Umesh. Happy Friday.
Friday. You got some incredible energy.
Yes, absolutely. Like always, after my third cup of coffee. So
Oh,
I
really?
just, yes. Well, it's been a good few busy days, and the week is going very busy. Was very exciting, and a lot of value being gained and delivered, and there's so much going on, but everything very exciting. So I just wanted to say to our audience that get your cup of coffee and get your cup of tea, and let's get in this chat with Umesh. Yeah.
Yeah, very excited to share this passion
Yeah,
with the people who have joined over the call.
sure.
Valuations and financial modeling
Mm,
is something I breathe, so I'm
yeah,
really passionate about this.
sure. So today on Friday, what type of financial challenge have you been solving for your partners, for your clients? Would you like to share a story from today or maybe from this week?
Yeah, I can share this from a week actually. Like I'm based in Dublin, Ireland.
Sure.
There is a very bustling startup community, and I am observing a lot of people who are quitting their jobs and getting into a startup world with the revolution AI is creating. So
Sure.
there is a massive opportunity which is very inspiring. People are taking a very bold step to come forward and try to try to take control of their destiny and create their own startup. So very interesting, and the ecosystem is very supportive in Dublin. And hopefully I'll get to know more about London and other European countries in coming months.
Certainly, Umesh, certainly. And I am one of those persons who wanted to take lead of my own life. And then I decided one day that let's work on something more challenging. And then I created my startup, and I have wonderful people, some interns who are supporting me in my startup today. And that's when we met through Umesh and I met through a mutual friend of ours, Rabia. And Umesh, I was talking to you the other day about how my startup can get that financial acumen that every startup founder or every early stage entrepreneur must be aware of, some essential prerequisites and fundamentals. So, yes, that's what we're going to talk about today. But before we get into valuations and getting that fundamental financial acumen out to our audience today, so can you give us a background of your experience in finance and what led you to start the Time Fintech?
Yeah, I started very early in my career, 15, 16, like working in mom and dad's pops business. That's what they say. Like, we used to have this distribution network for milk and milk products. So I have got like 3 years of sales experience, but then I started my journey with Grant Thornton. Then I went on to go with Deloitte, PwC, and BDO. These are all Big Six consulting firms. I specialized in financial modeling. With there is a segment called Deals in PricewaterhouseCoopers, and I used to do financial modeling, valuations, and due diligence. And that's where my passion has emerged in this space. I'm a CA from India. I've done my master's in Ireland in international accounting, and I am pursuing my CFA level 3 now, which is a highly regarded course for business valuations. Yeah, that's me, and I've worked with Meta for 2.5 years, and that was into revenue accounting.
Okay, no, absolutely. So when you said that you have studied finance and all the certifications that is required to get qualified, I know how the life looks like. It's very demanding. It's a very challenging lifestyle, or the education process that you go through to achieve all these qualifications in financials. I think ACA is see what were the main certifications? Is ACAA, ACCA? Sorry,
ACCA
I
we got it in the UK, and
right. Okay.
ACA is in India, and ACA is also
Okay.
actually.
And it's a consistent years of studies and years of giving exams and clearing those certifications and getting through different levels in the whole process. I think I only know the very little frame of it, but I know it's a very demanding course of studies and practice that you go through in your area, in your space. Okay, cool. So that's fascinating now, Umesh. So I think we missed out on. So what got you to start the Time Fintech? What kind of gap did you see in the space that you felt that as a part of the Time Fintech, I'll be able to you know cover those gaps or provide some services and support to the startups and entrepreneurs.
Yeah,
Yeah.
I've seen this gap 3 or 4 years back, and
Okay.
I couldn't start on this because of my visa restrictions.
Okay.
But that was my initial plan, that there is an opportunity. But what was holding me back was the visa restrictions.
All
But now,
right.
as they started fading,
Yeah.
I've taken this bold move to
Sure.
go on something which I have dreamed. And
Sure.
if you research factually, there is immense opportunity in digitization space. Like a lot of businesses wants to digitize their operations, save cost, and there is a huge gap in accounting. A lot of folks don't want to be accountant. I really don't know why, but this is it's one of the most interesting profession. At least for me, I was very clear since I was a child that I wanted to be a chartered accountant. It's a very interesting space. You will see the demand of accountants falling, sorry, the supply of accountants falling in United States, UK. uh, they don't People don't want to pursue this career, uh,
Right.
and which is creating a gap between demand and supply. And what I wanted to do is I wanted to get into this and be a one shop stop for startups where they can get the accounting as well as the financial planning and analysis. uh,
Right.
right now the industry works in such a way where accountants do all the transactional recording, but they don't advise on what needs to be done in the future. And I think startup and mature companies needs to have uh, account like they need to have a finance professional who can do accounting,
Sure.
understand what's going on, and also project what needs to be done over the next 5 or 7 years.
Definitely. So I would love to talk about the accounting services later in our conversation with yourselves today. So that's definitely a topic of discussion we have for today. Now, as a startup owner myself, so I am working hard. We all are working so hard, and we are networking, connecting, and we are constantly planning. So how can a startup like my startup today, which we are not there yet. We are in the very early stages, but how can we reach $1 million valuation in the next few years for our businesses, say in the next 5 years? And how do you plan to take the time fintech to $1 million valuation in the next few years? Shall we talk about that?
Yeah, yeah, it's a very
Okay.
interesting question, and I would like to share more insights on this. Uh,
Okay.
like there is a fundamental rule which a lot of people forget, and these are like three simple letters: time is money.
Yeah.
Uh, and For a startup, technically they don't have revenue streams
Mm.
over probably like few months or maybe 1 year or 1.5 year, because they are developing a product or maybe developing a strategy, developing some kind of intellectual property. So there's a lot of investments going in the first initial few months, and this is what I'm saying is time. And whatever you're investing in this phase will ultimately get monetized over a future period. Now, a lot of startups need to understand how. So this is a very crucial and important phase, because if you don't invest your time in a very strategic sector or industry, there are very high chances that you might not be able to monetize after a certain point, and then you will feel discouraged, depressed. You will feel like giving up or going back to your old lifestyle. So my goal is, like, for you and even like for me, is use this time to create an uh, to create a strategic space where whatever we are investing today will get monetized after a point of time. And for me, this is important to work with startups because they are also in the same space. We have like a very similar mindset. We are on the run, and then I also have few clients who are very established, and those are my cash cows. So I get a lot of I get my money from them, which helps me run my business. And then I'm also helping startups, and hopefully we'll have like a very long term strategic partnership over like 5 years. And as you grow, I grow, and it's a very strong collaborative approach we need to follow then.
Okay. And also for the cash cows, you have to really take care of them.
Yeah, yeah, like
You
this
have
is
to
very
be.
important because
Yeah.
whatever cash flows you get from mature companies,
Sure.
you can use that to invest in your own product. Uh,
Definitely.
like I'm creating my own product very soon, so the investment which is coming for this product is from my clients from the mature company. So I have a digital wing, then I'll be going into a product wing, and that's how you need to plan, Charol, because unless you don't plan your future, you can never generate value. You should know exactly what you want to do in year 1, 2, 3, 4, 5, and evaluate your strategies very, very frequently.
Certainly, certainly, Umesh. And you had attended a pitch tech event yesterday. Do you have any insights to share or key takeaways to share from that event from yesterday? I'm curious.
How did you know I attended pitch deck?
Well, I think we were talking about it.
Oh, really? Okay.
We were.
Okay.
Yeah,
The good point is,
sure.
like I observed one thing, which is
Mhm.
very interesting. One of the speakers at the pitch deck was telling that don't be ashamed to tell someone that I will be a millionaire, or my business will make millions. Don't try to undersell yourself. If you see a potential and if you believe in that, go for it. Be vocal about it, because investors would not like to see a person or invest in a company who is not driven by money.
Sure.
Like the main motivation of investor is, when I invest $1 or €1, I should get $6 or €6. That
Yes.
is like a 5x or 6x return. That is the main motivation. But if you are not driven by money, And money is not evil. Actually, a lot of people need to
Yes,
understand this.
it's not.
Money is not evil. Money is like, if you really fall in unconditional love with money, it is a great equalizer in life.
Absolutely.
And this is what I learned from this entrepreneur. Like, she was like, don't be afraid to tell someone that your business will make millions and billions of money.
Certainly, certainly, absolutely, Amish. I completely agree, and that's the goal you have to set for yourself. And yeah, certainly, I agree. I agree. That's fascinating. Now, so valuations. Let's get into the fundamentals of valuations with yourself. So, what exactly is valuation? Like a startup at a founder stage, I'm very curious to deepen my financial acumen. So let's start with valuation. And what are the key elements of valuation a startup founder must be aware of?
Okay,
Yeah,
I'll I'll try to explain valuation because you're not from finance background, and I
yeah,
want to be at that level because, like, in
okay,
the interest of audience. So uh, in previous centuries, people used to they never we never had money, and there was a barter system where people used to exchange commodities for the value they are deriving from uh, the commodity which they are receiving from the other person. So gold was exchanged for rice, rice was exchanged for copper, copper was exchanged for zinc, like different combinations.
sure.
Then over
Yeah,
a period of time, what happened? Everything got very standardized. Like, we introduced a finance. Like, the human race created a financial system. They started something like company. They started printing their own money, and this created additional challenges in terms of what can be an exact value of something. For example, I'm just holding a drive in my hand. This might value in euro terms maybe like 5 euros in a developing country like China, or it may be like a 20 euros or 30 euros in Europe. So what exactly is the value? This thing has evolved over a number of years, and in the recent financial system, uh, the value is uh, technically created from the cash flows or the strategic advantage you have in your business, in your geography, over other competitors. So when in this startup phase, or whether you're a mature company, your projected cash flows with some strategic advantage and certainty will drive your valuation. You may ask questions that, if there is no revenue, does that mean there is no value? Or if there is no profit, does that mean no value? We can answer that, but
definitely.
uh,
Okay.
yeah, like, these are like basic fundamentals and overview of like what exactly is the valuation, and
Mhm.
we'll discuss. Yeah, we can talk more about this. Yeah.
Yes, let's talk about when you mentioned the revenue and the profit aspect and how do they drive valuation. I would like to understand more from these two components
Yeah.
aspects, the revenue, what drives the valuation, the more the revenue, the profit, and what's the difference between these two terms. Yeah, let's talk about that when you're ready.
So
Yeah.
profit is probably highly regarded than
Hmm.
revenue, because if your business is making profit, then it's a good indicator that your valuation is going to be significant. Revenue also is not a bad indicator, because sometimes in the startup phase they have revenue, then they have an equal cost or maybe more cost, and then they are making loss. Like, consider an example of Uber. Like, they were valued in billions.
Okay.
They had a good user base, they were generating revenues. However, like, there was not a break even point until like last year or previous year. So
Okay.
they operated like for significantly more number of years, burning cash. And then I think it was last year when they started generating their first profit. So, but it doesn't mean they didn't have value. That there was some strategic advantage what Uber established, that they can help in mobility sector, uh, and that was a strategic advantage, and investors were willing to put money on that. So
Interesting.
even if you don't have profits, still there may be a huge value to you if you have good customer base or a good revenue.
Sure.
Another example is, have you heard of Perplexity AI, which is a challenger to OpenAI?
Tell us about that, this
So
project. Yeah.
like this is Indian entrepreneur in US. He created his own AI platform, like to challenge Google or OpenAI, and it has got its own machine learning models behind it. But it is valued in billions now. They just started like 1 year back.
Wow. Wow. Amazing. Sure. All right. And so were they valued because of their client base, their business model, or their revenue, the profit they were generating? What was their valuation criteria?
Per my memory, they had like 10 million active users. Uh,
Okay.
Investors were like, even if these active users are not paying for now, at some
Mhm.
stage they'll start paying.
Sure.
That's the reason we want to give $1 billion valuation to this company.
Hmm.
They were not
All
shy,
right.
and
Yeah.
if see, the thing is, if you're able to attract customers and
Hmm.
make them stick to your platform, that itself is a value which you have generated in
Sure.
the initial phase.
Interesting. So here you have already answered my next question that I was curious about, that if a startup doesn't have a revenue yet, it's not a profit generating I'm not there yet. So how can it still be valued? So you already answered that for us. Okay, so I think now I'm curious about, so as a startup, then what are the essential financial strategies that I must be ready with?
Okay, for the startup, I think in the initial first 6 months or 1 year, uh, try to control the cost and put your cost in those decisions which will generate value in the year 2 or year 3. So
Okay.
your strategy to put your time, and when I say cost, it's not just about money. You also have to prioritize time, because time is money for you. Okay, you're losing an opportunity cost because you could have earned maybe 60, 70, 80, 90K in employment. So there's a huge opportunity cost which you are putting. So strategize your time, uh, work hard. Don't be afraid to work like 7 days sometimes. Like I sometimes, if I when I have to go for the clients, sometimes even I work 6, 7 days, and because I love it, it doesn't feel like I'm working. uh, so that's so like in short, prioritize your time, invest in decisions which will generate value over next 18 months or 2 years, and you will be on the track then.
All right. And may I ask you now, so the importance of accountants. So I am, as I said early in this conversation, that I'm trying to get as much as financial acumen as possible, but there might be an importance of having an accountant services that I can tie up from early on. So when do you recommend a company or a business to start working with accountancy? How do you, what would you like to add in this, the accounting aspect of the business? Hmm.
Accountants are, for example, if you're running as a sole trader, for I would say don't pay accountants. It will not help. But if you're a
Okay.
company, then you have to pay accountants to file your annual returns. But just make sure whomsoever you hire can also act as an advisor uh,
Okay.
in financial planning and analysis phase.
Mm.
Uh, Plan that accountant should have a business acumen to explain what might happen over the next 5 years, and how to achieve the goals. Because, for example, one of my client wanted to develop a product, and it was costing 35,000 euros to him. And I saw his code, and I was like, why don't you develop the same product in an offshore model in India in a 15,000 or 17,000 euros? So if I was not acting as an advisor, I was just a blunt accountant, then I
Okay.
wouldn't care. For me, that is like he spends 35 and I account 35. But if I am acting as an advisor,
Sure.
then I'm also adding a value to save cost, or and try to manage my client's expectation, or assist him in investing in the right areas of business, so that he
Right.
saves cost now and then generates value later.
Definitely very valuable points added that accountants needs to be a consultant and an advisor to the business as well so that more value can be reaped in a short period of time.
Yeah.
Definitely. So Umesh, I'm thinking about, let's talk a bit about the macroeconomics at the moment in the in the European space. So where Dublin has a huge tech infrastructure and ecosystem. We support thousands of startups in Talkbatch Lab, Enterprise Ireland, and Leo, and there is a big startup community. And how are we doing in comparison to other stronger economies in European Union, in terms of the financial aspect? Like, I think it's a very general question that I wanted to ask you, that how are we doing in terms of the GDP, and mainly when it comes to supporting the startups, from your overall experience of working with the startups so far. So I think that's what I was curious about
Yeah,
to
like
know.
as part of my consulting, I generally track like what can be a GDP growth rate for individual economies. I think
Mm.
Ireland was in recession, technical recession. So, what is technical recession? You have a negative GDP for 2 quarters, and then you technically fall into recession. However, the impact was not very high. The economy is still holding up well.
Okay.
Government is having very good budget surplus. If I'm not wrong, it is more than 20 billion. So unlike other governments where there is a negative surplus, uh, Irish government has got a positive surplus because a lot of MNCs are there. And focusing on the startup question, yes, there is a massive opportunity here. I've seen a lot of like I work in Guinness Enterprise Center, and I've observed folks who have moved from Germany or United Kingdom to establish their startup in Ireland, and they are working in Guinness Enterprise Center, and specifically in the healthcare sector. There's the healthcare sector is massive. The ecosystem is pretty good to help you expand later in UK and USA.
Okay.
So it's a great opportunity for startups to start in Ireland.
Amazing, amazing. That's really good. And also the tax aspects, the tax haven for the businesses as well. I think it's one of the key unique attraction points for companies to come in and establish themselves in the Emerald Isle.
Yeah, yeah.
Yeah.
Wouldn't call it a tax haven point, but
Yeah.
yeah,
Right. Cool. It's like, yeah, absolutely. So a lot of economic cycles bring a lot of different challenges and pain points to the startup economy, and also we do see some pessimism as well, and that results into low funding for the startups. So how do you see the funding aspects for the startup these days? And is there any pessimism there, or you have seen it, the pessimism earlier in the early times of this year? So what do you think about that?
okay.
Mhm,
I have a visual on my LinkedIn page, the time,
mhm.
and it
Okay.
like I just want to explain that thing. The way an economy works is they have a cycles. You're at the bottom, then it's an early expansion, then there is late expansion, then there is stagnation, and then there is again recession and depression. So the width of the cycle might differ. I mean the time horizon of the cycle would differ, but we are certainly at a stage where economies have stagnated, and we are talking about recession. There is pessimism in media in what can happen. What like they are saying that there is a bubble in commercial real estate property segment, specifically offices. So the 10-year bond yields are at the highest they can ever be. Uh, sorry, they are at the lowest they
Yeah.
can ever, because
Hmm.
so uh, yeah, I think But that's not a bad news, because what will happen is whenever there is pessimism or change of economic cycle, then there is a massive opportunity which can come for startups then, because the
Okay.
problems are changing, the ecosystem is changing, and
Yeah,
you always have this gap where you can go and start breaking the system and create your own system. So I think it is in the interest of startups. Like recessions are always good, and a lot of if you see a lot of unicorns have been started in recession, because
that's
when
right.
it breaks,
Yeah.
you have to like start creating it, and you have to be ready for it strategically.
Mm. Lovely, absolutely, absolutely, Umesh. Yeah, you have to be ready for it. And as you said, that most of the unicorns have been created in recession times, so it's that time presents itself a big opportunity. Certainly, certainly. So I want to move on to discussing a bit about investors and bankers, venture capitalists, angel investors. So how should a startup approach these investors and bankers? So you go to any conference. I recently was in the European tech conference organized in Madrid, and I met some angel investors and venture capitalists there, and hearing them speaking about their industry is always so empowering. So how would you say that a startup should approach these bankers? Shall we talk about that and get into more into the bankers and pitching stage or in that
Yeah,
discussion around it? Yeah.
yeah. Like if a startup owner
Yes.
or a mature company, like if they don't want to dilute their equity stake, they go for a bank. Like everyone knows it actually. Like
Yeah.
they don't want to dilute the stake, go for a bank. But how
Hmm.
do you approach an investor? Uh, like pay strong attention to risk and reward. These are like two very important like words and like attributes which you have to know when you make a financial decision. How much risk an investor is taking, and how much you should commit to reward that investor. So if investor is taking low risk, then he should get low reward, and same goes directly proportional: high risk, high reward. So,
Okay.
if your startup is at a very early stage, there is no product development. Like you don't like you just have an idea or maybe a patent. Then the investor is coming, and you might have to dilute a larger percentage of stake, because investor is taking high risk.
Yeah.
However, if you are already established and you have done all the hard work and you have set up everything, the cash flows are flowing in, then you are in a better position to negotiate with the investor. Okay? So this
Okay.
is the second area is how do you present your ideas.
Yeah.
Like my company helps in creation of information memorandum, business plans, pitch deck. uh, so we go with several attributes, right from what is the business, what are the problem, what are we solving, how big is the market, what is the total addressable market, what is serviceable market, and what is the competitive landscape. There are many factors which you have to think when you start your business, and yes, so my company does that as a service, and hopefully we'll launch a product to reduce the cost for startups in the future.
Okay. Right, right. So I'm thinking, so before going to the investors or the bankers, you need to have your valuations right. And that's where the startup founders and entrepreneurs can reach out to the Time Fintech to seek your consulting and your advice.
Yeah,
Isn't yeah,
I'll add one more point to this.
sure. Hmm.
Maybe like in the interest of audience, that uh,
Sure.
like why do they need the business valuation? Like this
Hmm.
is, I think everyone should know it. There are
Yeah.
several reasons. The
Hmm.
first reason is mergers and acquisitions, which is like every startup dreams of. Someone will come, give them millions, and they have to just part away like 10 or 20% of the stake. So that's the most that is a very common point for valuation done. There are actually the breadth of valuation is very wide. Like people also get valuations done for financial reporting, because there are compliance standards like IFRS ASC, like IFRS 9, and then there is an American US cap standard, which wants mature companies to do a fair valuation of their financial assets and financial liabilities, and whatever change happens from one reporting date to the other reporting date goes into the profit and loss statement as profit or loss. So, and like I did one valuation assignment where someone was getting divorced. It was not a good situation.
Oh, okay.
Like the wife and husband started this business together, and now they wanted to do a valuation so that they know how much they value separately. uh,
Okay.
yeah, and there may be like tax compliance, state planning, capital gains tax,
Yeah.
several other areas where, like, so what I'm trying to say is it's not just business valuations are not just for startups.
Hmm.
As you grow
Okay.
your business, you might need valuation uh, for different decision making.
Right.
You meet
Right.
different investors.
Okay. So, yes, so talking about the startups and the growing businesses and the ones that are established. So obviously they have different themes or elements and the process for the evaluation, and I think is that the right way of
Yeah,
understanding it? So okay.
yeah.
Right, obviously it's a yeah, certainly okay. And right, I'm thinking um what about the compliance side? Are there compliances that matter here a lot in valuations? Um,
So
mhm,
valuations are technically driven by decisions, uh,
mhm,
like equity buying and selling. But on specifically the compliance part, there are two areas. One is financial reporting. The other one is tax planning. So in the financial reporting, what happens? For example, you might have to, for example, a VC fund has got 10 different companies in which they have invested. Now, every year they have to value those 10 companies, do a fair valuation to report to the owners of the VC fund. So this is a compliance thing. So if you have taken funds from a venture capitalist or PE, they will they will want to know how's your performance every 3 months, because the reason they are asking is they again have to go back to their shareholders and explain how is this business doing.
yeah,
So the time you get funding, your level of compliance will increase. Like you will be under strong scrutiny because someone has given you money, and they
mhm,
will knock on the doors and ask your performance more frequently than the phase where you don't have a funding. So there is pain both the ways. When you don't have
yeah,
money, there's pain, and then then when you have money, then there is another kind of pain. It's a very long
definitely.
journey you have signed up for.
Okay. Okay. So may I again ask you to elaborate on, because we've been talking about startups a lot, but when you're working on evaluating a startup or a established company or that's already generating a huge amount of revenue, so what kind of challenges do you really see? And what's easiest to achieve? Do we need to talk about that? Um,
Okay, so
yeah.
mature companies are generally taking valuation services, or they get
Mhm,
valued when either they are negotiating with the bank for refinancing or restructuring.
mhm, mhm.
Because what happens, if your business is running smooth,
Yeah.
then you're not worried about getting it valued or exchanging a conversation with stakeholders.
All
But
right. Yeah,
if you're
makes sense.
burning cash, then you might have to
Mm,
get valued and reach out to investors. So
certainly. Okay,
this,
that's a very good point. That's a very good differentiation. Yes, I can understand it more clearly now. Yeah. Yeah, certainly.
yeah.
Yeah. Sorry, Umesh. Please carry on. I think
Now,
there were other additional points you were mentioning. Yeah.
no, I think for mature companies, one thing they
Mhm,
have to be aware that try to reduce the cost
mhm.
and invest in innovation. That would be my strong
Okay.
recommendation, because AI is picking up, uh,
Okay.
and a lot of investors might ask uh, the senior management of mature companies that how is their projected mapping out for the AI
Certainly.
investment, and AI will boost valuations. Because, for example, if your profit margin is EBITDA margin is 30, example, like if it is like 15% over the past 5 years, and if AI can increase that EBITDA margin from 15 to 25%, technically AI has increased your valuation.
Certainly. Yes, so I think it's so essential for most of the companies to think about how AI fits in their next short and long-term roadmap.
Yes.
Certainly. Yeah. And so tell us about how are you planning to incorporate AI into the time fintech? Or
So
are you
yeah,
thinking about it? Yeah, sure.
a very interesting question. So
Yeah.
the way I visualize this business is right now the consulting, the financial modeling is costing around 2 to 3,000 euros in Europe, and I certainly believe that, and it takes 2 weeks. Sometimes it takes 2 weeks of time. So there is a great opportunity where AI can reduce this 2 weeks to probably 3 or 4 days, and then also reduce the cost of 2 to 3,000 euros to 1,000 euros. So there
Okay.
is there is a 50%. You can reduce the cost by 50% or more than 50%, and you can reduce the time by approximately 75%. And that,
Wow.
yeah,
Wow. That's
yeah. And
amazing.
I started this company, and there's reason that I have this the time fintech because I want to reduce the time for
Amazing.
people who can do valuations or financial modeling.
Amazing. And do we really believe in these AI models and how they are working? Are we highly optimistic about their accuracy? Yeah. What do you say?
The models are getting smart,
Yeah.
but there is always a way. Like I've met an AI expert from Madrid, and he was explaining me how we can cheat these models and how we can make them fools. Uh, so
Oh,
there is there is a way to get them corrupted, but the models are
mhm.
getting very fast and very
Okay.
comprehensive, and the competition will get intense. Like OpenAI, Gemini,
Yeah.
Perplexity, a lot of players are coming in the space, and there
Sure.
is huge opportunity. You can use the APIs from different AI platforms to optimize your business. So I would strongly encourage everyone who is on the call to look for AI and try to integrate that into your core business so that you save time or you save money, and you make the process more efficient.
Certainly. Incredible. And Umesh, now, so if I have to ask you to sum up the top steps a startup or a matured business or a business that's say 5 years old should take right now, what these steps should be. Will we be able to differentiate it among different the companies the companies that are in different stages.
Yeah.
Yeah.
For
Okay.
startup,
Sounds
for
good.
startups, what I'll do is I'll explain about startups, then maybe growing and mature companies separately, okay?
Okay.
Because
Lovely.
they have different problems.
Mhm.
Startups focus on innovation. Please understand how AI will affect your business, and actually use AI to create a new business. uh,
Okay.
Invest in this innovation. And the second is focus on like have this cost whatever money you have from your hard-earned life. uh, invest in Invest very carefully. Always look for alternatives, and explore. If you're building product, like do explore building it in developing countries, because you might get a very high value for low cost. And if you need any suggestion on that side, please connect with me, and I'll route you to the right developers or uh,
Okay.
tech experts in India, and even like
Great.
in Ireland also. Like I know a lot of people from big techs who can guide you in building your tech stack. So for mature companies, problems are very different. They're already generating cash flow, but the problem is they are not growing in their cash flows, or maybe their cost is more higher than their revenue, or cost is increasing at a higher rate than the revenue growth rate. So
Sure.
in those companies, yes, like invest in digitization, innovation, get your data on the cloud, try to
Okay.
save cost, because I gave an example where you increase your EBITDA margin from 15 to 25%. This is very much applicable to mature companies. And if you're struggling with debt on your balance sheet, reach out to investors or banks now, before it's too late, and strike a deal. And if you need any support on the financial modeling side, on the restructuring or refinancing, we do have ready financial models. So if you reach out today, I can explain the financial modeling in just like 24 hours, and how your
Okay.
cash flows will look. So uh,
Interesting. Yeah.
yeah, that would be my suggestion in short.
Okay, lovely, Umesh. And so you've just mentioned about the financial modeling and valuation that the time fintech supports companies in different stages of their growth. So who is your what okay, so for what services and support should our audiences reach out to the time fintech? So if you would like to sum up the services and the support that the time fintech provides
Yeah,
at this moment.
if you're a startup, if you
Yeah.
want to put your strategy together and analyze
Okay.
like what you might do over the next 5 years, reach out.
Okay.
And what will happen is, over the next 5 years, like I've seen a lot of entrepreneurs who invest hard in money like 3 or 4 years, and they don't get the value out of it, so which is very bothering. So you can sit, play with the numbers, and then decide whether the idea is worth exploring or not. Don't burn your 2, 3, 4 years and get disappointed and carry those
Mhm.
memories for life. Believe
Sure.
in numbers, believe in data, uh, and
Yeah.
believe in strategies and planning. That is what is
Lovely.
my recommendation there.
Interesting, interesting, Umesh. Certainly, very insightful session, and gave me some really important points to work towards for my own startup. And it's already 45 minutes. And would you want to add some additional points that we might have missed out on, or have we covered most of the essentials of around valuations? Um,
Uh,
Anything that I missed out on asking you?
No,
Yeah,
we can have another session on the AI,
sure.
like impact of AI
So,
on the business valuation, and I can share a few
okay,
platforms which startup owners can leverage, or maybe mature companies can leverage
certainly.
to save their cost or maybe boost their revenue. But yeah, for now, I think this is great, Charol. Thank you for this.
Yeah, thank you to you. It was a wonderful session, Umesh. And for our audience, we look forward to your recommendations, your feedback on our session, or your recommendation on the next topics that you would like to hear from Umesh on the valuations, financial modeling, AI. Please let us know in the comments below, and please also provide your feedback to us so we can improve on at the webinars going forward. And yeah, so I think reach out to us if you have any innovative ideas, and we are happy to connect and chat. And thanks for joining us today. And in the meantime, Umesh, let's share some the links or the articles that you would like the audience to read. We can share it in the comments for of this webinar
Yeah, I
later
think
today.
I can just put my website there, and
Great. Okay.
they can look at the blog section or maybe follow the LinkedIn channel.
Okay.
That will be helpful. Thanks, Charul, and thank
Amazing.
you for joining. I can't see
Thank
you.
Yes.
I can't see
Uh,
anyone. Thank you for
yes. So, Umesh, we have a question here. So, from Rabia, what do you think about digitalization will impact or create challenges for the businesses in terms of compliances? It will be interesting to know. So, that's the question I see in the stream for now. Would you like to answer that question, or I'll repeat that?
Yeah, yeah,
Uh,
I would say
yeah.
that. I got this question. So I can
Oh,
explain about compliance in fair valuation. I'm not expert in compliance in other areas, but I
okay.
think a lot of mature businesses will uh, have their internal models running, who will do the fair valuation of financial assets and financial liabilities. So these will be the compliance model, and like I think it's more applicable for mature companies.
Mhm.
Startups have relatively less compliance, and I think for startups the biggest compliance should be on data privacy security, because when they are establishing it, like they are just in the process of establishing, and compliance in fraud detection, because if startups are taking data over the cloud, that is one area of compliance which they have to be very, very careful. So
Okay.
make sure you sign proper service level agreements and have a strong database security firewalls against it. Any other compliance? Yeah, don't overvalue yourself or don't undervalue yourself. That's
Okay.
the reason we say fair value. Uh, don't go to an investor saying that I'm like worth 2 billion with no plan. That will completely diminish your credibility and make you look bad in front of others.
Okay. Great, great. Hope Rabia, this the answer from Umesh has we have responded to your question, and yes, we look forward to catching up again soon. Thank you, Umesh. Thank you, everyone, for joining us, and we look forward to catching up with you soon again in our next webinar. Thank you for your support today, and happy Friday, and have a great weekend ahead. Take care. Thank you, Umesh.
Thank you, Charul. Thank you,
Yes.
everyone. Bye.
Bye bye. Cheers.